Good afternoon, everybody. This is Dan Hussey with ElliotWave4Cast.com, bringing you our November 21st, 2013 New York session recap. We're going to go over some trade setups we took today in the live scalping room, as well as some light forecasting for some of the yen crosses, Euro, Aussie, the usual suspects, because it was definitely an eventful day today. I actually want to begin with a setup in the Aussie US dollar, and this all, the excuse me. Today we were. Let's step out to an hourly chart. Take you through everything. We saw equal legs that should take us down to 92s. Same anchor, new low of the extension drawn from the 96 handle. Hit downside targets. You see how targets were hit this morning at the 61.8 line. So now same anchor, new low. Means this market, in terms of its 4-hour trend, should rally up to 94 at the very least to fill that trend, unless it's going to break down in new extensions. Going down now to a 15-minute chart, let's look at what we saw here. We broke the Globex long off of highs, pulled into an ambush short off of highs. The market then broke down, traded extensions. Those extensions eventually became new extensions here, which eventually became actually, I'm sorry, I drew that wrong. Here it is. It's from here. This new extension traded right here. Same anchor, new low, never trades. So it begins a new extension. This extension breaks out of its target, goes to this negative 61.8, and we actually looked for a brand new micro down here. We're going to zoom in. We're going to see that this new micro one never held an extension. It failed out right away. The second it failed out, that's when we drew up the long and we took the micro. We took the micro long. Bam. Used basically put the stop below the low, so we bought the 92.20s. It was 20 pips to have a stop at the low or below the low here, so we had a 20 pip stop on the trade. We still do. Stop at 92. And our first target, in other words, we took half the position off up here at 92.40, so we just got that half the position off. We bought 4, sold out 2, to book roughly 20 pips of profit. Now, the remaining stop, staying where it is, below lows, the safest place it can be right now. That stop, if hit, it should be a net break even now between what we gained on the trade on the units, the half the position we closed at 92.40 for plus 20 pips, and then the minus 20 pips off the stop would be net break even. So this is effectively how I get into swing trades all the time. This swing, stepping out to the daily, this full pullback here has the potential to take the market up to the parity level, 1.0. I mean, that's the full long here. It's defending a 61.8 line if we get a bounce from here. All right, we'd want to see the rest of today's candle just be all upside. But if it gets that kind of bounce, you just got in a swing trade for 800 pips for less than 20 risk that never went against you. You can't ask for more. Granted, I call this these lottery trades, the ones that have potential for a massive swing like this, because it's like a lottery ticket. It's really cheap risk, $1 or $2, right, 3 maybe, for a huge upside potential. Point here, though, is that we look like we've completed potentially the cycle down here, and we need more confirmation. Obviously we have to see some upside, but we were able to get into the trade we wanted to for virtually no risk, right? And that's what's important. So going back down to our 15-minute chart, another reason we used the 92.40s was the original extension here. Hold on, let me find it again. So the original extension here that traded to its secondary target, and because no new extension held, I still give the market a little bit of extra solace, and I still draw the same anchor new low of the prior one, because this one never had a shot. It never traded to target. It never existed. So the 92.40 level was also, go down to the 5-minute. It wasn't only the micro long's actual target, this little pullback's target. It wasn't just 20 pips from the low to highs. It was also where the next in the series extension short could reside. So we could head lower from here in the Aussie US dollar, and if we do, like I said, no blood, we're free, hooray. We have huge upside potential, and all we really need to do is get through the 92.50s now. So that's what's going to be key now is a break of the 92.50s, and this market, will then pull it probably into bigger longs, maybe even start extensions at that point. But we'll worry about that tomorrow if we're still in this trade when the room opens. We'll talk about the game plan and exit strategy, how we're going to trail a stop, and turn what was, a micro ambush reversal entry into a swing trade. Okay, it's a trick. It's not a trick, but it's it's pretty much my favorite way to trade. I look for this type of setup all the time, and today it worked out in our favor. This level is not so much different than the Euro Aussie. If you remember, we took a Euro Aussie long. It was a 140.95 long. We move down to a 5-minute chart. We can actually take ourselves all the way down to those lows, fateful lows, where at that time the new extension on the Euro Aussie was drawn here. You see the break above the 61.8 line. Immediately following that, gave us the 140.95 long. And it was that level that we ended up taking the trade off at 105 pips at 142. But we had every intention of holding this as a swing trade. And had we done that, we would have, trailed stops with 61.8 lines the whole way up. And technically, probably, very realistically, we would still be long. Excuse me, still be long. Now with a stop at the 142.50, so we'd be long. We would have locked in so much and probably taken a little bit off as we go. So at this point in the game, though, for the Euro Aussie, kind of nice segue into this trade of how there was a little micro off the lows, and it was the start of this huge swing, and that's what we're hoping for in the Aussie as well. If it doesn't work out, so be it, right? It was a great little trade. If you're happy with the profits, the 20 pips, take the 20 pips off the table. But there's a lot more to potentially be gained. So I'm drawing up the full short off these highs. We're not, definitely not, this is the Euro Aussie now, definitely not looking to be a seller. We've went straight through this 50% short, straight through these prior highs. Above the 146.55 area, I'm going to start drawing up again the full halfway back long. That could trade in an ambush setup at that point. But right now, today, we're looking at extension longs drawn from the 44.88 highs here on Tuesday, last Tuesday, not this Tuesday, 2 new highs. And so a pullback would have 145.56 support. Stops would need to be like 20-30 pips below there, and this would be for the push into the 61.8 line. I'm not looking to buy the pullback now, because now we're really starting to get towards the end of what could be a run up, because the second that 61.8 line breaks, sometimes markets will just reverse and give you that ambush setup. So just like we did, just like the little 5-minute charts, it works on the big time frame sometimes too. Well, not most of the time. So I'm not calling for a top. It's in a series of longs. I see the measured moves very clearly on the Euro Aussie. It's going to continue higher here until it's not. And then when it finally does, if it does break the opposing shorts, when it finally does turn over, it's going to give us a nice, really big pullback for a swing higher as well. Okay? So you never miss an opportunity in trading, I like to think, because there's almost always a pullback. Except in the pound yen. That doesn't pull back. Seriously, that thing is a beast. All right. So I want to talk about the Euro US dollar. We basically we just got filled also on a the one gosh, what was it? It was a 134.85 sell, 135.15. Looking for the first target, 30 pips. Downside targets of 133.60s. The full short on the euro has traded. Full swing has now traded. That off that level we broke down, and they actually ended up the shorts, the bears ended up actually breaking the counter trend long. So it actually came down and tagged 61.8 lines here, gave the long really no respect, And this is now the ambush short inside of this larger short. So if there's going to be sellers, if we're going to go down to a new low, it looks like to me that it needs to be really from here. Maybe a retest of these highs, whatever. But this is the setup I see on the euro. Little micro sell, 30 pip first target, 30 pip stop. Not a micro, it's a 15-minute trade. For downside of 100 pips. Nice risk reward ratio. Not quite as good as that Aussie trade, but not every trade you can take with 20 pips risk for 800 potentially pips to gain. And if that trade works out, I hope I'm your hero. Because there's a lot that has to happen for that to work out. So there's a very small probability it actually goes to that final target, but there's a pretty good probability it's going to get a bounce for a couple hundred pips here that we can capture at the very least. So again, looks like 3 waves up right into the short, and again, just looking for euro to come down and make a new low below 133, just like the Aussie did, and maybe reverse from there. So if we're seeing now the euro maybe needs some downside, the Aussie needs some upside, euro Aussie is probably going to find that top here soon and turn over as well. Again, not saying sell it. I would prefer to be short the euro Aussie via the euro US dollar and the Aussie US dollar, because then you can trade them independently. If one side gets stopped out, so be it, the other side's still valid. So there's more than one way to anticipate a pullback in a market like the euro Aussie. Anticipate after we break a full halfway back, but doing so being short the euro dollar from its level and long the Aussie US dollar, would be the same thing. So, all right, onward to the S&P 500. Going out to a 4-hour chart here. I'm going to minimize our positions here. We're watching this the 1704.75 anchor to highs. It traded the same anchor new high extension, or hasn't traded same anchor new high. It hit 1790 upside targets, 1790 whatever they were. Now the market needs to pull back into the 1752s, and if it continues higher without pulling back into these levels, we actually need to mark this prior high, because the market could potentially begin new extensions. If the market breaks out above here, we're going to be looking for the these 1775 anchor to highs for brand new extensions. We'll worry about that when it happens. For the time being, I'm being cautious in trading the S&P. Today we tried looking at our 15-minute chart here. We tried for the full short off of my fib. We tried for the full short off these highs. We ended up getting stopped out. It was in the direction of the gap fill. Statistically, I wouldn't have done anything different with the trade, except maybe made it half the size. But made it a half position trade. But then again, that's 20/20 hindsight. It was a short in the direction of the gap fill after we had broken extension longs, and every time that would have been a trade for me. I see us now also holding, if you noticed, this prior high was held as support today. So this is obviously some kind of pivot for the market right now. And holding this high and going higher from here means, like I said before, it's going to become the inflection point that we're drawing fibs from going forward for new extensions. So do have to give this market justice, draw up the Globex halfway back long from the 1774 halves to today's high, see if there's anybody home at 85s if it trades. But otherwise, I'm probably on my hands in the S&P until one of those bigger levels trades, things become more clear, and ultimately we can go back to killing the market. Pound US dollar, trade in the extension to target. It's simple as that. So 1662 targets. Again, at any point in time, this market could give you the full halfway back long, but at this time it looks like it's breaking out and hitting upside extension targets. So 1662 in the near term. It's just been a short squeeze off these levels, and quite remarkable how strong the pound has been and how weak the yen has been. And obviously you look at the pound yen and you're like, holy cow, that was the mover, because they were huge moves. So that being said, not much else to say about the pound. I actually want to skip right into the 10-year note, because I see this as being very technically significant right now in this market. Traded the 2013 full halfway back short 128. No surprise there. We're looking at potentially a head and shoulders, left shoulder, head, right shoulder, pattern playing out here. The full short off of the 128 highs here, defended 618 lines, has downside targets of the 125s. 125s happen to be this full halfway back long, and also potentially the target for a neckline break, is anywhere really 125 to 124 here. So inside of all of this today, 15-minute chart, we had broken. They broke the longs after FOMC, and then basically the market's pulling into a full short here. Again, adding a study here, throwing the 6J up here. There's been some divergence today that traditionally, though, sorry guys. Whoa. Oh, I don't want a candle, I want a bar. That's why it's messing me up. Okay. 15-minute chart here. You see the divergence basically starting today at 8 a.m. at the New York Open, and 10-year up, dollar yen down. Whenever this happens, almost every time I've witnessed a divergence of this magnitude, it's usually the 10-year that then ends up following the yen. And one of the best examples of this, sorry about that, siren. One of the best examples of this was here. This high in the 6J, which would have been a low in it would have been the October 7th lows in the dollar yen. Look at how long it took the 10-year to top. 10.7 to 11.1. I mean, it diverged for how long? And then finally, the 10-year said, oh, okay, is finally saying, okay, I give up. I'm catching up with you, yen. The yen is clearly leading the way to the downside here, and the 10-year needs to play catch up. So what I see here is traders, potentially Bank of Japan, whoever, actually starting to price in the rate moves into FX markets that are very slowly starting to be priced into the dollar or into the U.S. denominated markets like the 10-year. And that's why you're getting these bounces, their divergence to fade, because this level, this 126 spot 170 should lead you right back down to catch up with the yen. And let's also take a look. Where does let's take a look out. Go out to the daily here. 10-year down. Down to its daily targets. Here, where does that put the dollar yen? Well through the prior highs, that's for certain. And actually, this is the 108 level right here, this 92. So, not surprising that the 10-year going to target should be the dollar yen going to target, and then even on the shorter term here, guys, even on the shorter time frame, going down to like the 4-hour, these little 4-hour charts get, go to target. Hold on here, I'll get it right. I mean, unfortunately, if we're going to see a move down to 125, we're going to probably see, again, the dollar yen having already broken through the up to 102. So that's what we're looking for. When this actually tops, that's probably when the dollar yen's going to accelerate. Then, as this breaks through this trend, this neckline, we get downside targets filled from this pullback, and ultimately the market, then it's going to be a really big test. And I think that's when the 10-year might be the biggest asset we have to determining if the dollar yen's going to top around 102 to 103. Is what happens at 125 here in the 10-year. If it breaks it, if it knifes it, and we end up down here at 124 and we break this long, I think we've confirmed the exhibition of the dollar yen triangle to 108s. You might have some up and down, but I think if this pullback on the 10-year, I think is going to be really important going forward for our dollar yen. I don't see how the dollar yen is going to be able to, unless it's completely, unless the 10-year is completely lagging so badly, which it does, the dollar yen. I don't see how the dollar yen's going to make it to 108 if the 10-year can't even get through 125s. So definitely going to make it down there for a test. And it's going to be a big question of what happens when we get there, and how does the market react, and basically what happens when we see U.S. rates hit that 3% level, because we could be heading there, and a lot of good smart bonds traders think we are, and a lot of people I trust with that type of analysis. But my analysis, what I see, shorts have taken over. There's a trend line, a neckline that's made to be broken, and lots of stops to run, and potentially a market, the dollar yen, that's leading the way for this entire move that could take us down to 124s. So remember, which way you cut it, leading or lagging, both looking at the dollar yen and the 10-year together like this, figuring out where their levels are, seeing what the technical setups in both markets is helping us determine, okay, there's a good rationale here. If the 10-year can make it through that 124 or the 124 160s, break this long, I think there's no doubt that the dollar yen goes to 108. But if it fails there and we get a strong rally, that could be the reversal that Eric has been talking about in that third wave, in that kind of expanding flat with a B wave triangle. I don't personally believe in that method or that count very much. I know it's there, and I say I don't believe in it because I'm seeing a different picture being painted. That this is the burst, and this is what a burst looks like. And I'm sure, but I'm not saying he's wrong. I'm saying that he's done a good job of keeping us aware of the alternatives, because he didn't even need to tell us about the right. He didn't need to tell you guys about the triangle. Why would he have to? Everybody saw it. Everybody knew it. And he was the contrarian in him, and in me too, does believe that there's going to be a major test of both the dollar yen and the 10-year down here. That both are, it's going to be huge. Because for the dollar yen to go to 108s, I think that the 10-year needs to break 124s and be on its way, to its 119 support level, which is where, now we're talking 3% on the 10-year. Now we're talking, really a real rise in rates that the dollar yen can actually probably put in a top, and then reverse off of once everybody figures it out. It'll be too late. You'll get all the fundamental guys running in and buying the high. So, and then we'll get that really big pullback, that big wave 2 pullback that we'll eat that up too. But correlations and looking at both markets here is what's keeping us, and not only keeping us sane in some of the madness that is going on in the yen right now, but it's keeping us very much aware of what the potential for the market is. 125s here on the 10-year should spell out 101 to 103. We're already at 101, so 102 to 103, a retest of those highs, and that's going to be the major level. If then again, the dollar yen could just continue through, and that could be the catalyst for the 10-year to sell off. Because the 10-year it's a slower boat than the dollar yen. It takes a long time to turn, and when it finally does, it trends well, but it takes a long time to roll over and then finally goes. Whereas we all know in FX it can just go like that. This is a big, thick, super liquid market. The most liquid U.S. markets in the world are our bonds markets. The most liquid U.S. non-currency markets are the bond markets. So this thing doesn't move easily, and when it does move, it means it. So very, very clear technical pictures, and very good analysis here that shows that the probability of going to 102 to 103 is high. We're going to have a lot of answers at that point. You're going to have the confirmation of the move to 108 or whatever, or the move to 119 in rates at that time, and that's it. We wanted to be long into these levels. We are, and that's it. Long the dollar yen, short 6J or short the ZN. We wanted to be in those positions. We are, and that's exactly how we wanted to be geared up. I don't want to be trying to chase this into support and trying to sell the 10-year into support here. I wanted to be short at these highs, and I am, personally. Dollar yen, same thing. We got long on all the dips, preparing for the potential for the move. We anticipated the triangle / C wave up into 102, 103s. And now we're trying to read the very fine line and the fine print between all of our markets to determine exactly what's going to happen. Right now, all points signs to me are pointing to triangle burst to 108 still. I want to see the 10-year below this trend line, resistance or support, hitting downside targets and potentially below 124.80, 08 to confirm though. Okay? Not just confirm, but make you feel a little bit better. Okay? Excuse me. And finally, dollar yen. Like I said, we closed at 101 spot 15, right about here actually. I mean, this is one heck of a run so far, and it's definitely got upside to go. A break above 101.60 is to me the equivalent of the 10-year breaking below its trend line, resistance, or support, that neckline. So the move into this area is, in my opinion, going to happen. The question is, from where? It could go straight up from here. It could, because we're seeing the 10-year actually trading its resistance level. It's 50% back. That could just go, and this could just keep going. Obviously, at some point there's going to be some kind of pullback, and the question now to us is, okay, where is that pullback? Okay, and I'm going to hide these. I'm going to hide these orders for the time being so we can just see the chart. And again, 4-hour chart here. See the triangle within the triangle. We've already broken above prior September highs, coming up on July highs. I mean, all we have is lows, higher lows below us. There was a swing here. Remember the only swing we really got and held the 6-to-1-8 line? This swing has now hit its negative 61%. Let me get rid of some of the stuff on this chart so you can really concentrate and see that. I'm not concerned with any of these trend lines for the triangle anymore. We're through them. If we start to pull back seriously, I'll draw them back up to see where broken resistance, now potential support, could be. But remember this swing? Targets were hit. After targets were hit, no full halfway back. Well, guess what? We hit the negative 61.8% line today. That means we're drawn up now from high to high, 99.40, anchor to highs, the new extension long. And this is now the hourly extension long, the 130 level. 130s represent the level that will anticipate this market holding, and a bigger pullback. I'm not anticipating a full pullback anymore from the 97 swing low to highs. Now it's a high to high to me. And I mean, it could pull back. It couldn't. There's a lot of highs here that it could bust out of. And actually now going down to the 15-minute chart, we're going to take a look at the high to high extension that we are looking to buy in the room, the 108. That could be the pullback that takes us higher. This is, to me, this move has just hit its wave 3. Call this 1-2, 1-2, whatever you want. This is the wave 3 of 3, and it's gonna, it's got some legs here to go. It's not done yet. And it's eventually, like we've said before, you're eventually going to start to get, I mean, it's obviously this market has turned parabolic. We're starting to see now the leg here is probably going to continue to extend, maybe even to and through support, and then you're going to start to get this. And then the question is, on a major pullback, does it head all the way up and break out, or does it just continue lower and put in a top? So that's going to be the question, like we said, like we've been talking about, from basically this area right up here. This is going to continue up. Again, you're going to get your 3, 4s, and then there's going to be that bigger pullback before probably the final push through highs. And the question is, again, which anchor to high holds the pullback? There'll be some technical failure level. There'll be a failure level up here, right? A 6-to-1-8 line that if we break, that's when we know to bail and this market's going lower, or at least into some kind of full halfway back, down to these levels. But I'm not anticipating that type of move here. I'm anticipating it's going to go up in extensions and kind of cascade higher, like it should, because what we're seeing here is there's this S-curve theory where as you turn parabolic, you create this S. In other words, there's an apex where the market will pass through and then start using that same S curve as resistance as it cascades higher, and that's what again, kind of what I'm looking for. And I'm actually kind of thinking we go straight through all of this, but this is just so much strength. Again, at least above these highs in the near term. Anywhere in this area could be the inflection zone for a big move down to at least this area, but potentially a little bit lower. And yeah, I mean, it's a lot can happen still, and we're going to be constantly watching the dollar yen and the 10-year for those little hints of what to do with our positions. Do you hold them? Do you cut them? That's why we're going to, obviously we're going to start trailing stops with whatever series of extensions begins here, and that's it. It's set it and forget it at that point. You just keep trailing your extensions up. Hopefully the Aussie dollar trade, speaking of which, how's it doing? Okay, it pulled into another halfway back long actually. Hopefully the Aussie dollar trade, tomorrow we can wake up and we can discuss the game plan of how to go forward with it. But we'll see. The 92.40s is getting a reaction here. So is a little long off the lows, so it can go either way, but we're free and clear anyway. So hopefully we get free in the dollar yen tonight. I definitely see the euro dollar hopefully gets free. I definitely think that we need to update real quick before I finish this up. I think we need to update the excuse me, the orders here. There they are. Oh no, I think 84. Everything's appropriate on these orders actually. Come to think of it, so below 170. 130 is the next support. Below 100, which is where I'm going to probably be trailing all my stops now, to the 100 level for all of my swing longs. We're now talking potentially a pullback of any one of these lows, like a full swing pullback. So highly doubt that that's going to be the case. Never say never. We've gotten that type of volatility before, but definitely want to see the continuation of this trend at least for another week or two. Up into these highs, and maybe sometime in early December, right around the 5th to the 10th, we'll get a top, but nothing yet, guys. So Jason asked, so I stepped away, but is Aussie dollar basically dead if it breaks today's low? Yeah, I mean, that's where my stop is. We got the first targets filled, and yeah, so if it gets stopped, it's done, it's over. Because below here, the market could just break down. But if it does break down and there is continued dollar strength, hopefully that'll benefit our euro dollar position. So we're kind of playing the dollar here more so than anything else. But we're doing so in a manner that we're able to get free both. Then everything works out. So hopefully the euro dollar gets free here, and if that means the Aussie dollar sells off too and takes us out, so be it. The euro dollar trade is technically a more stable setup. In other words, there's an actual target coming up here soon. So, all right, everybody, that's all I've got for you today. Everything still remains about bonds and keeping an eye on the dollar yen and the 10-year and their correlation, and it has not led us astray so far, and I'm not anticipating it doing so now. So, again, you can buy the dips on any of these yen crosses, but you have to do it safely. You have to understand these are only wave 4 pullbacks. A push into a new high means that could be it. Okay? And you cannot move stops on this type of trade, because a reversal below these levels does mean, if you move the stop in the 170, you've got 40 pips to go below your next low. Then, another 30 pips if it goes below 100. Now we're talking you're 100 pips underwater if you remove stops. And there's no support until 98 something, to another 200 pips lower. So these markets can reverse and be nasty quickly, but so far, I mean, we've got a very valid extension level. We're going to watch this all closely, and ultimately we've got very valid polls that could continue this market's trend and should continue this market's trends higher. So have a great night, everybody, and we'll be back with you as price action develops.